Hey everyone, Couch Investor back to another video for today. So we've got Fiverr's earnings report to go over. Now at the time of making this video, the stock is up between 3 to 4%. Of course, that might change when the market opens. Now, it did beat on earnings per share estimates. It did miss on revenue just a tiny bit. Now, to me, overall, this was an okay quarter. Could it have been better? Yes. Could it have been worse? Yes, as well. But what's important to me is to see that management is fully focused on making this business more profitable. They say we're going to see this already in 2023. They expect to exit 2023 with double-digit growth year over year as well. So that's great. Of course, we know that the year-over-year comparisons for next quarter, so for Q1, will be difficult because last year Q1 still did not have the negative effect of the macroeconomic environment that lasted throughout 2022 and that we can still see today. So expect better year-over-year growth as we go over Q2, Q3, and Q4. But overall, I liked what I saw, and I'll start here with a quote from the CEO. So we are proud to deliver a strong finish to a challenging year. With a shift in the macro environment and SMB spending sentiment, we quickly adjusted our business focus to drive efficiency, which is reflecting in us delivering the most profitable quarter in the company's history in terms of adjusted EBITDA. That said, our strategy and ambition to change the future of work remains unwavering. We have a strong roadmap for 2023, and we will execute with intensified focus on efficiency to become more profitable. So of course, we know this already from the past 2 quarters. They did adjust the business a little bit to be more profitable right now, while still growing a little bit. But as we've just seen from this quote right here, they have a strong roadmap for this year and will execute in intensified focus and efficiency to become more profitable. And that's great. We're even going to see the net loss is pretty close to break even right now. And so before we go and jump into the earnings report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's dive right into this. Revenue grew 4.2% year over year to $83.1 million. Active buyers actually finally grew quarter over quarter as well. It's up 1% year over year to 4.3 million. Remember, each and every quarter throughout the year, it was just 4.2. Nice to see it finally go up a little bit. Spend per buyer is up 8% year over year to $262. It's actually flat quarter over quarter. Take rate has improved 0.2% quarter over quarter, and it's up 100 basis points year over year. So that's again great, best in class there. Gross margin on a GAAP basis, 81%. Non-GAAP, 83.1%. Nothing special there. GAAP net loss, just $1.3 million. A huge improvement there. Then when it comes to adjusted EBITDA, we're at $9.4 million. And adjusted EBITDA margin, $11.3 million. The long-term goal for adjusted EBITDA margin is 25%. So of course, they still have a long way to go. Then when it comes to financial outlook, so for Q1, they expect 0 to 2% year-over-year growth to between $86.5 and $88.5 million. As for adjusted EBITDA, between $9 to $10.5 million. For the full year, adjusted EBITDA will come at the midpoint of $50 million. For revenue, they expect to grow 4 to 8% year-over-year. That's for the full year. Of course, some quarters will grow double digits, some might not, probably. Well, the huge impact of Q1 is weighing on this year-over-year growth comparison. Then when it comes to the cohorts, one thing I didn't like from this earnings report is that they did change some little things when it comes to, well, what we're used to. Now, for this, we're still used to it. It's fine, even though we go all the way back to 2017, if I remember correctly. Anyways, the last quarter here, they recovered 90% of the performance marketing investment during this quarter, which is, I think, a little bit better than Q3, much better than Q2 and Q1 as well. But overall, in the past, they usually made that investment back already during that quarter. Of course, difficult market, etc. So I think 90% recovery here is quite okay. Now, when it comes to going up market, so they say here that high-value buyers, those who spent over $500 or more in a year, contributed to 63% of the core marketplace revenue. And the number of buyers who spent over $10,000 a year grew 29% year over year, significantly higher than the overall buyer growth on the marketplace. This is great to see. This is, of course, one of the big aspects of the bull thesis, is that they can go up market and compete for those big ticket items. Then when it comes to optionality, so the amount of categories that they offer, they say here the total number of categories in their marketplace reach over 600. Again, there's no other platform like it. Which category was obviously highlighted? Well, you guessed it, AI related services. As generative AI and ChatGPT got more and more attention, they see here their catalog team reacted quickly and officially launched AI services in January. Now, of course, some people might say, look, with this AI technology, wouldn't this make Fiverr obsolete? Yes, in some ways, probably it could be. But they say here that the majority of them, most buyers of AI services, are coming to Fiverr freelancers in order to cover the last mile gap between the machine-generated results and their business use cases. And Fiverr provides them with streamlined access to experts for these emerging technologies. Which means, fine, right now AI is really not at a point where you as a business can solely rely on that. Especially not when it comes to design, maybe for some aspects, yes, like writing a letter, could be. But maybe SEOs, you still want to go to a human, maybe design, you still want a human to design something. Which makes sense. We need that human interaction still today. Maybe in the future that might change, who knows. Then when it comes to promoted gigs, Seller Plus and subscription, they say here that in 2022, promoted gigs grew revenue north of 100% year over year as it continued to expand coverage and exposure on the marketplace. When it comes to Seller Plus, with the recent launch of the two-tier pricing, it saw strong adoption trends among a wider group of sellers. In a relatively short period of time, the program has already grown to over 10,000 subscribers, with a strong reputation among the seller community. As for subscription, a product that allows sellers to offer recurring services to buyers is also starting to make meaningful contributions. They say here categories such as SEO today have over 20% of orders through subscriptions. These orders are 3 to 6 months in length with an engagement size many times larger than that of a typical order. And then this is the part where they change it a little bit. Usually in the financial discussion part, you had all of this information, but you have little graphs here on the side where it would be easier to compare quarter over quarter. That's not there today, so I'll have my second screen here to look at it. Of course, this we've already seen. Now, with regards to operating expenses, this has come down year over year and quarter over quarter as well. And so, of course, when it comes to R&D or sales and marketing, we're down year over year and quarter over quarter. When it comes to G&A, quarter over quarter, non-GAAP, we're actually up just 0.1%. But overall, it's nice to see that they can do more with less, or at least they can still operate quite well in a difficult market without overspending, which is great. Let's wait and see what happens throughout 2023 if they can continue that trend. Now, with regards to net loss on a GAAP basis was $1.3 million compared to the $19.5 million 1 year ago. So huge improvement there. Adjusted EBITDA, as we've seen, $9.4 million or 11.3% of revenue compared to $8.9 million or 11.1%. So of course, they're becoming more and more profitable. Great to see. Maybe, who knows, this year we might see on a GAAP basis a profitable quarter. I don't know, just speculation, but could happen, right? And then lastly, as for the financial outlook, so for revenue, they expect Q1 to be the most challenging quarter in terms of year-over-year growth rate due to the comparison in Q1 2022 when growth was minimally impacted by macro headwinds. They expect year-over-year growth rates to increase over the course of 2023, and we expect to exit 2023 with double-digit revenue growth rate at midpoint. Again, very, very positive in my eyes. They also say here we are committed to deliver meaningful expansion to our adjusted EBITDA margin this year, regardless of the market conditions. This is very, very important as we go towards a more profitable Fiverr. So to conclude, like I said at the start of this video, was this a good quarter? It was an okay quarter. Could it have been better? Yes. Could it have been worse? For sure as well. Now, I do trust management here when they say that they're going to execute correctly throughout the year. When they say that they're going to become more profitable over time, I trust them 100% because they've shown me that during difficult times, they can still execute correctly, drive this business forward. I don't think I could say the same for a lot of other businesses that we've covered on this channel. So to me, pretty okay quarter. If it's up 3%, 4%, it will be flat. I'm fine with that. Let's wait and see what 2023 will bring. Of course, there's still this question, oh, but isn't this a high growth stock? Why isn't it growing double digits or whatever? They say they will be growing double digits when the comparison is a bit easier. It makes a bit of sense. Of course, this is just short-term issues. Over the long term, yes, this is still a growth stock. And so that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.